Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Hello, PI listeners. Thank you for lending me your time today. Welcome to the Passive Investor Show. I'm John Fortes. Our goal is to provide you, the busy professional, with passive investing tips and tricks for your real estate investments to leverage more time for you to focus on your true passions. Let's get to work. Hey, ladies and gentlemen, today we have Travis Watts. Travis, welcome to the show. Thank you for coming on.
Thanks so much for having me, John. Happy to be here.
No worries, man. I appreciate you for taking the time to come on. So, Travis, normally with different shows, people read the bio and to be honest, some people send a big bio and some people send a short bio. But the best bio is the one when you explain exactly how you got here, right? So give me the TLDR. If people don't know what the TLDR means, it's too long didn't read. That's a something on Reddit where for the millennials that just whatever. Too long didn't read. Tell me what it is.
Okay, cool. Yeah, let's make it short and sweet. Bottom line is I started out just as a W-2 employee, trying to stock away some of my capital to the side into real estate. Started with single family, ended up in multifamily, started active, ended up passive. And I'm also the director of investor relations with Ashcroft Capital currently.
That is awesome. We'll talk about how you got there, but let's talk about what made you transition from active to passive.
Yeah, good question. I guess, back when we're talking about 2009 is when I got started in real estate. I didn't know what I didn't know. So my network was pretty small, read a couple books, really only knew a couple people investing in real estate personally. One was my dad. He didn't get into real estate until his 50s. He got into single family. So when someone would say real estate investor, all that came to mind was single family home in your own backyard, managing your own tenants. That's all I knew, literally. So that's how I got started. That was my first deal. And I started progressing through that. I love so many elements of real estate, specifically passive income. And to be honest with you, I kind of went about it in the wrong way, in the sense that, I got more into active projects, doing more like fix and flip type stuff and a little bit of house hacking and vacation rentals. And I was working a W-2 job, as I mentioned. Not only that, I was working 100-hour work weeks in the oil industry as I'm managing this portfolio of single family. And as that started to grow and expand, quickly realized I was building a job for myself, a second job, which I had no capacity to take on. So it kind of led to me going back to the drawing board eventually and saying, wait a second, how am I going to take this small portfolio of single family? How am I going to scale that up to, 50 homes or 100 homes over a lifetime? I didn't see that was going to be possible. So I tried some things with property managers and things like that, and really had to go into some real estate meetups, podcasts, books, right? And find a couple mentors that were doing different types of investing. And I kept hearing about real estate syndications, right? Like people saying, hey, if you actually want to be passive, literally, if you do, then you ought to look into some other models like these. And totally foreign concept at the time. I was a bit skeptical, to be honest with you. And so I did one. And I said, okay, I'm willing to try this because it sounds honestly too good to be true, but I'm going to try one. And just absolutely fell in love with that passive model. And long story short, I transitioned my entire portfolio into syndications and passive types of investments and liquidated all of my single family portfolio.
Let's talk about that. I think that's pretty awesome. What did that transition look like for you? And at what, what was sorry to cut you off, but I want to know for the audience, what did the transition look like for you in the fact of where were you home-wise, like assets-wise? How many houses or single-family homes did you have? And then how did you go about that?
Yeah, good question. Roughly 5, 6 homes, single family. Like I said, some of my strategy was more like fix and flip stuff. So it was kind of rotational, but, it was at the point, I remember this specifically. In that oil field job, I worked mostly locally, but I ended up actually taking a promotion overseas. And so I was gone for about 37 days at a time. And of course, never fails during that time. I had a lot of issues come up with my portfolio, right? Sprinkler broke, hot water heater went out, So I'm pulling in friends and family and like, oh, can you run over there and collect this rent check? And, it was kind of at that time that I thought, there's no way, like, I can't do this. I don't want to burden my family or friends. That's when I was trying the property managers too simultaneously. And so, that's kind of when I hit like rock bottom, so to speak, right? And thought, man, I have to make a change. Everything was in my head at that time, from give up on real estate. It's not for you. It takes too much work and effort, all the way from that extreme to, I know some people are doing this right. I don't know how they're doing it, and I don't know how they're passive, but I know it's possible. I do know that. And so it's kind of that optimism, pessimism, back and forth. So how did it look for me? Intimidating. I knew I had to learn a lot. I knew I had to find a mentor. I had to learn what syndication was all about. I had to do a lot of due diligence and a lot of research, but ultimately I just took one step forward, right? After getting a little bit of the education, I thought, okay, I'm going to take some capital, a little bit of mine. I'm going to put it into one deal with one group, do their bare minimum investment, and just see, right? Just see how it goes. If it turns out bad, it's not for me. If it turns out great, maybe that's, a possibility for me. So that's how I got started. One deal, passively, watched the distributions come in, the reporting, and really made a lot of sense to me at that point.
That's awesome. So that one deal transitioned into many other deals down the road, but how was that first deal for you? Because you went in with you were very skeptical, and obviously it sounds like it worked out, right? So what was that transition like with that, where going from skeptical to believer?
Yeah, it's a great question. And the funny part of that story is, the first few investments I made, I was putting way too much emphasis on pro formas, right? Just like solely looking at numbers and saying, wow, that one's 10%, that one's 8. I'm going to do the 10, right? That's a higher number, without considering the team and the track record and who's on the team and have I vetted them, and that was just not in my mind at that time. That was the biggest mistake I made. So in those first 6 months of that deal that we're talking about, that first deal, things went exactly as planned, right? Monthly reporting, monthly distributions, yada, yada. Turns out though, the group just lacked a lot of experience. And so as some hurdles and roadblocks came up, the business plan kind of altered, and long story short, they had to sell the project. So it wasn't the best deal, but I was profitable in it. All the investors were. So at least we had that going for us. And at the end of the day, it was a asset class that I firmly believe in. I believe in a value add, multifamily strategy in particular markets. And this fit all those check boxes. So even though it was quote unquote mismanaged or the team lacked the experience, the deal came through. It made us a profit. And even at that time, at the end of that process, I had already done like 2 or 3 other deals. And so, I had a little more diversification, but it was somewhere in there, 2 to 3 deals somewhere, and I had sold 1 or 2 of my single families at that point to do those deals. And it was somewhere around there that I started realizing this is taking 0% of my time and efforts. And I just thought, that alone is worth so much to me. I never wanted to be in the business of real estate per se. And that resonated well with me.
That's pretty cool. It sounds like you benefited so much from that first experience. If you can go back and tell yourself one thing about that first experience, what would you tell yourself?
100%. I would tell myself to look at the team. Always look at the team. First, this is how I look at them nowadays. I vet a team first, everyone on it, their connections, their property management companies, their track record. That's number 1. Number 2, I look at the market and the asset type, right? I'm not big into doing like new development, new construction personally, just as a philosophy, right? So if it's a value add, if it's multifamily, if it's over 100 units, I've got my criteria, right? In the markets that I personally believe are growing and diversified, things like that. That's number two. And last is going to be the deal. Obviously important, the deal itself, but if you've got a great team and they're experienced and they know what they're doing, they're going to have a good deal. They're not going to be, taking huge risks and chances and things like that. So that's kind of the third step to me. I put more faith and trust in the team, because as a passive investor, I mean, you're relinquishing your control, right? You're saying, look, I believe in you to find this deal, underwrite it, execute the business plan, and make everybody whole and hopefully profitable. So that's how I look at it.
Absolutely. I love that. I love that. I love the way you broke that down, and that you would tell yourself that going back to the beginning. So tell me where you are now, and basically what's been the biggest benefit to get you to where you are now?
The biggest benefit to me personally, I didn't even realize this back then, but the whole point to me of financial freedom, right? Financial independence, whatever you want to call it, is just to have options and flexibility. And what I mean by that is I did not like my job when I was a W-2 oil field employee. I didn't resonate with it, didn't have a background in it. No one in my family. I just felt like the black sheep there, right? Just wasn't part of that culture. I did it for the money. And that's a sad way to live out a long existence, right? Is to do a job you absolutely hate and then to think, well, I'm going to do that for 40, 50 years and, we'll see where things go. So passive income allowed me to quit that job, right? And then to seek work that I felt was meaningful and important to me, that I could personally grow from. One of the first things I did after leaving that job is I went to work for a brokerage firm, because I had a genuine interest in learning stocks, bonds, and mutual funds. I wanted to have the whole picture, not just all I do is real estate, all I know is real estate. I wanted to have a little more well-rounded perspective for personal growth's sake and for my own investing. So I quickly, realized that wasn't a model I really liked. That's not really an industry that fit well with me, but it was a great experience. I learned a ton. And again, I had the flexibility and the option to quit, to walk away from it. I wasn't obligated and chained to my desk to say, boy, if I quit this job, I can't make a mortgage payment. So that's the whole point. Bottom line, the biggest thing is the freedom to, hey, I want to work. I don't want to work. I want to try this job. Didn't like it. I'm going to quit and do this thing now. And so it's led me to one of the groups that I invest heavily with, Ashcroft Capital with Joe Fairless. It's led to me being able to work with them in their investor relation department, which is what I do anyway. I mean, I talk about what I do, and I talk about investing, and I talk about markets and asset types that I like and why. And so I get the benefit, and I'm very grateful for that opportunity just to be able to do that as a quote unquote, job, if you will. But that's where I get to dedicate my time. And, that's a great place to be. To me.
That is awesome how you're able to basically just jump around like almost like a nomad to do different jobs that you are interested in. And yep. I think that's truly beautiful. Like, it's a beautiful thing to be able to do. So Travis, one thing the PI listeners can take away from this, what would be the one thing you could provide for them?
PI listeners, I would say, look deep into yourself, right? Evaluate who you are, what your goals are, what are you really after? I knew I was after passive income from day one. I didn't pursue the right path toward that because I never outlined and defined my actual goal. I didn't sit down in 2009 and say, I want, 10,000 passive income a month or whatever. I just said, in general, passive income sounds pretty cool. I'm going to go do a fix and flip. It didn't make any sense. And so I wasted a lot of time learning a bunch of things, reading a bunch of books that really didn't do much for me, because that's not a type of strategy I'm ever going to follow in my life. So I think I could have cut that learning curve at least in half had I just focused a little more in the beginning. And it's not easy to do, but in the sense of, soul searching and looking deep, but it is easy to do. just to write down some goals and things that you're good at, things you enjoy and like. And, what is your why? What's your purpose? What do you actually want to get out of life? So.
That is cool. So one thing I want to ask you, what is basically like a normal year for you in this field? Is it conferences, education, and stuff like that? What are you doing consistently?
That's a great question too. I've always been big into self-education, whether we're talking about reading a book, listening to a podcast, attending a seminar, going to a real estate meetup, finding a mentor, attending a Tony Robbins seminar. I do it all and I love it all. And I think that's because there's been a few key things in self-education that have made huge impacts on my life. So I realized just like, hey, I read this one book. That one book made me, whatever, 200 grand or something in profits. And just to look at that ROI and say, I spent $10 and 3 days of my time, and that was the outcome. And that's pretty inspiring. I think that would motivate most people. And so typical week, month, year is just traveling to, like you said, educational, networking opportunities, summits, seminars, events, things like that. I just love sharing. I love networking. This is how I find out about a lot of groups that we invest with. It's just word of mouth references. Best place and easiest place to get that is in a big group of real estate, investors, right? And just kind of brain picking, if you will.
Absolutely. Absolutely. Travis, thank you for coming on the show. But one last question. This is an easy one. This is basically, okay. I'm throwing you an alley-oop now. How can we reach you?
Oh, okay. Tough one. Email's usually best. You can reach me at travis@ashcroftcapital.com. You can also find me on Bigger Pockets, LinkedIn, Facebook, I'm out there. So I'd love to connect. I love sharing, no particular agenda, just, let's talk real estate and keep in touch.
Absolutely. Thank you, Travis, for coming on. I really appreciate you taking the time, and thank you, man.
Thanks, John. You bet.
A lot of investors I partner with have one major challenge. They are busy professionals that love to create memories with their families, but are too busy to actively look and find value-add real estate that cash flows. Hey guys, I'm John Fortes, and I want to partner with you. I provide investment opportunities through apartment syndications that allow my partners to invest passively so they don't have to worry about trading more time for money. If you are interested in creating passive streams of income, wealth creation, and all the tax benefits that come along with investing through real estate, I encourage you to fill out the form at www.investwithfortes.com. Invest today so that tomorrow you can trade money for time. Once again, that's www.investwithfortes.com. And I can't wait to partner with you. PI listeners, I'm grateful for your time and I appreciate you for listening. For more information, go to passiveinvestorshow.com. If any of this resonates with you, please subscribe and leave a review. The more you know, the more we grow. Thank you for tuning in. Till next time.